What's up, Neil? Working on your Camaro in your garage? You look like you look like something right out of a Jersey Bruce Springsteen video.
I just went for a run. That's all.
Ah, I wouldn't know.
Yeah, I know. I could tell.
Ugh. All right, here we go. Welcome to Renmac Off Script, where we discuss markets, economics, policy, history, and life. It's the 29th of December, 2023. I'm Jeff DeGraff.
I'm Neil Detta.
And I'm Steve Pavlik.
As a reminder, all the charts that we reference are posted to our Twitter account at Renmac LLC. And if you're listening on Spotify or Apple or your favorite podcast source, give us a thumbs up, will you? Give us a review, only if it's favorable. And we'd surely appreciate that as we go, because it's part of how we think about the world here. So I got a sponsor for us, guys. I mean, I know it's hard to believe, but I found a sponsor. We'll see if we want to go with them. But I thought Chico's Bond Bailsmen, they're willing to sponsor Renmac. Their slogan is "Let Liberty Ring." You might know them from Bad News Bears. They also sponsor the Bad News Bears jerseys. But I thought it was fitting that we let Chico's Bonds Bailsmen be the sponsor for the Renmac podcast. What happened this week, Neil? You had a couple data points out. Anything that shook the discourse of the trajectory for 2024?
No, not at all. I mean, this was a very quiet week in economic data land. Obviously, when we get back to the new year, it's going to be a very red hot week in terms of economic data. We have, the ISM manufacturing data. We're going to get employment. So it's going to be pretty busy next week. But I would just say, and I'd love to hear your thoughts. I mean, for me, I think the most interesting development in the last few weeks has been, at least in the financial markets, because we haven't had much data, has been this, decline in the broad dollar exchange rate. The dollar's obviously coming down. Obviously, if the dollar's coming down, that means that foreign FX is strengthening, right? I mean, so particularly like emerging markets. And if that means looser financial conditions in those economies, because if their currencies are getting stronger, then they're going to be looked at as better credits. So you see, investors bidding up EM credit and equity. Usually, in other words, the drop in the dollar historically is a good sign for global growth. And, that's obviously been missing this year, particularly in Europe, but obviously China as well. And, it's going to be interesting to see how global growth looks next year. I mean, we have seen some tentative evidence of things improving. And the most notable, of course, has been the pickup in South Korean exports. Historically, that's always been sort of thought of as the canary in the coal mine indicator, so to speak, because South Korea tends to specialize in sort of early supply chain inputs. So the idea is that South Koreans are exporting semiconductors, and that's used in other manufacturing processes, and that shows up in final production in the U.S. at some point. So it'll be interesting to see how that shakes out. But I do think the drop in the dollar is interesting, and it does suggest, at least to me, that global growth conditions should be improving next year.
Well, on that, technically, for the first time in a long time, the dollar is oversold right here. In fact, I think that that hit yesterday. So we'll see if there's any more room to push that. Very similar to the S&P. I mean, last week, I know this is Friday, so we didn't know last week at the time when we did the podcast, and maybe it'll be the 9th week this week. But last week, we had the 8th consecutive weekly gain for the S&P at the close of Friday. And that feels very mean reverting-y, doesn't it? It feels like if you're up 8 weeks, it must mean bad things as we go forward. But the reality is not. Back to 1926, when we look at it, returns out the next 4 to 13 weeks are actually slightly above average. Specifically, 4 weeks out historically, it produces a gain 77% of the time. And in those wins, those 77%, the average return, this is for 4 weeks out, is 2.5%. And then the times where it's negative, it's only a modest loss of about 1.1%. So this thrust that we've talked about it in 20-day highs, we've talked about it in the percentage of issues that are overbought, really also being confirmed by this sequential string, if you will, of winners. And that historically ends up being pretty bullish for the S&P. Now, I would say, just looking at the chart here and looking at some of the sentiment data, the last couple of weeks has now really put us on a stilt, and the dangers there are, frankly, that we have relatively low volume here over the last week, so not a lot of real demand coming in to soak things up, and sentiment's getting a little ahead of itself when we look at the ETF flows on the S&P. So I don't think this is the point where you really want to be putting all the chips in, but certainly that's not bearish. I think we can trade somewhere between here and 4,600 on the downside, still be within a very, very nice and bullish consolidation for the S&P that sets up for the first half of 2024. So still looks good, just a little extended. Be smart about it is basically what we're saying. Just understand that there is kind of this unnatural influx of money that comes to IRA participation, 401k participation, and the like. So let's make sure that we're being at least cognizant of these things. Steve, a lot of stuff going on. I mean, I know that we had Colorado a week ago. We had Maine here this week. That stands in stark contrast to Trump being on the ballot in probably two more important states, California and Michigan. Any insight there? I mean, this is just really kind of funneling us towards the Supreme Court, wouldn't you say?
Yeah, the Supreme Court inevitably is going to have to take this up. And that's sort of what we said was going to happen last week. You have more states still sort of recognizing that it's not the role of judges to act in the political realm. And again, I think a 6-3 conservative majority Supreme Court is probably going to rule in that way. But again, just more, I think, fodder for Donald Trump and sort of his claims of a two-tier justice system, as well as Nikki Haley sort of saying some inartful things this week on the Civil War.
It's kind of funny when you think about it. I mean, it's interesting. Steve mentioned 6-3 conservative majority. I mean, I get that. I know that's how most people talk about it, but I think it's just, I mean, it's not about a conservative justice or a liberal justice. I mean, it's just, neutral interpretation of the law, I think, would dictate, he hasn't been, even in Colorado, I mean, it was a 4-3 decision, but those were all Democratic appointed justices. So if they're split like that, I mean, imagine what a more balanced court is going to decide. I did think it's sort of an interesting thought experiment, because everyone's always crowing about whenever Republicans win the presidency that they don't get the popular vote. Well, in this case, you're basically shutting down Trump ballot access in a bunch of blue states. So it'd be hysterical to see Biden run up the score in the popular vote, and then Trump potentially winning the Electoral College. having that disconnect even wider than it has been, right? I mean, anyway, it'd be an interesting lesson for the people that are always crowing about the popular vote.
Well, I mean, Neil was sort of making the point, about the popular vote, and one of the Democratic and liberal arguments against Trump is that he's always going to be a threat to democracy and a lot of the norms. But if you look at who's proposing to change a lot of those norms, it's actually Democrats looking to change away from the Electoral College system to the popular vote, looking to pack the Supreme Court with more justices, looking to change the election process from the states to a federal system, and now looking to sort of have courts determine who can be eligible to run. So, I mean, I think at a minimum, you could say both sides are probably guilty of maybe looking to change some of the precedents more in their favor, at the least.
Well, you made a good point too, which was the Supreme Court basically, required that they don't skip the appellate process, right? That they're going to go through the traditional procedural.
In reference to special counsel Jack Smith, I think that came out after we recorded the podcast last week. He had asked the Supreme Court to skip the appellate process and sort of rule on Trump's immunity. And the Supreme Court, I think correctly, said, no, I mean, we're not just going to adjust our timeline based on what, your politically motivated timeline here to try to get this case wrapped up before the election. That's not, I don't think, a healthy thing to do. And they said, look, you don't just skip a federal appeals process. And I think that was encouraging, again, going back to just maintaining existing rules and norms.
Yeah, no, exactly. At least, let's set the boundaries, let's set the trajectory, let's set the process and follow it, for God's sake. One thing that stood out to me, and we were going through the S&P, the big names, the Magnificent Seven, Frankly, all are still in good uptrends. You've seen a little bit of weakness in relative performance as this market has broadened out, so nothing real shocking there. But going through and looking at Nvidia for as an example, and I got this off of QuiverQuant, and we haven't done the work, so I don't know exactly whether there's any insight to this or not. But on the 21st of December, Nancy Pelosi bought somewhere between 1 million and 5 million shares worth of Nvidia, which is pretty interesting. And I was going through the data again. I haven't scrubbed it. I haven't analyzed it. I don't know if it's useful information. If you should fade or follow. I know there have been some questions about this going in the past, but certainly she doesn't make a lot of trades. And so when we start seeing this out of 8 trades, and you're throwing down $1 to $5 on one stock, certainly seems to be relatively curious, let's say. Maybe a Christmas present in the waiting for Nancy Pelosi as we go. But just as an aside there, is there ever going to be any progress, Steve? I mean, if the three of us on this call did anything like this with any access to information, you'd be seeing the twinkle of the handcuffs in the screen here and hearing it on the podcast. Is there going to be any legislative action in restricting the essentially insider trading that congressional members are allowed to do?
I mean, I think the short answer is no, because it benefits party members from both parties. And then you have the agencies that aren't really inclined to do it, given that lawmakers control their budgets. So, I mean, count me in the skeptical camp, but I'll believe it when I see it.
Yeah, it's really amazing. Neil, what do you have on the docket next week?
It's going to be a busy week, as I was mentioning. I mean, the
Yep.
employment number is going to be the most sort of important thing. Now, remember, in November, we had the return of the UAW workers that kind of juiced the private payroll number. So you'd expect that to kind of, obviously that doesn't happen twice. So the growth isn't going to be as strong as it was in November. So, but we're still, consensus is looking for something around 130,000 on private payrolls. And public sector employment's been adding around 30 to 40,000 a month on average for the last several months. So, something in the 160 to 170 range, I think, on the headline. It's interesting. I mean, one of the things that I've been thinking about is what's the likelihood of firms cutting payrolls or laying people off in an uptick? Unlikely. I mean, companies historically don't lay people off when the stock market's, rising. They do it in the opposite situation, right? I mean, so for example, in 2022, there was a lot of news around layoffs and layoff announcements, and particularly in the tech industry. And not surprisingly, I mean, tech took it on the chin that year. And, and I think going forward, I mean, if the markets are rising and companies are somewhat less concerned about recession next year, which they are, I mean, corporate confidence is picking up, they're going to be less likely to fire people. And, that at a minimum, I think, implies some stability in the employment in the labor markets. We'll see. And I do think that one sort of potential risk for next year is, do we start to see renewed declines in the unemployment rate? The unemployment rate has kind of been bobbing around 3.5% to 4% for the last while or so. But do we see renewed declines in the unemployment rate? The reason is growth is holding up, real economic activity is holding up, but a lot of the pickup in the labor force has been driven by the foreign-born workforce. I mean, there was a delay of visa approvals and things like that, after the pandemic, and once that kind of went away, we had this burst of foreign-born workers in the workforce. I mean, the labor force has been growing about 300,000 on average per month for the last year. That is not sustainable. That is inconsistent with any demographic-based estimate for labor force. Now, things can change. Maybe participation rates go up for younger workers or whatever, but it's hard to see that pace sustaining itself. So if the labor force starts to moderate somewhat, then it wouldn't take as much to push the unemployment rate down, and that could spook the Fed later. And keep in mind that we continue to see the Fed cutting starting at the end of the first quarter, so in March. So that's something we're keeping an eye on going forward. But other than that, it's payrolls and ISM next week. We'll also get the global PMIs from the rest of the world too.
Yeah, certainly a busy week. And I know January, Steve, is a busy week for policymakers. Give us a little preview on some of the things we need to watch for.
So next week won't be that busy of a week because lawmakers don't actually return until the following week. Well, they'll be forced to tackle a long list of items that they've been putting off dating back well into last year. You're going to have to address government funding with multiple dates coming up, with January 19th for the first 4 bills, then February 2nd for the remaining 8. Won't surprise me that January 19th date gets aligned with February 2nd. You're also going to have to address this large security supplemental with aid to Ukraine still being linked to a border deal that never materialized before the House and Senate left. And there's still a lot of reason for skepticism that even if it clears the Senate, it will pass in the House. So that will be occupying most of January, which will probably set the tone for the rest of the year, because in an election year, there's just not a lot of legislating. Neither side really has a lot of incentive to do anything beyond the first quarter. And then outside of that, you're going to have Republican presidential contest in January 15th in Iowa, January 23rd in New Hampshire. I think if Donald Trump wins both of those, case is probably over at that point in terms of presenting an opportunity for another candidate. But upsets happen. So if that happens, then we'll wait and see. And then internationally, I'd watch January 13th. That is the presidential election in Taiwan. So busy month ahead.
Well, from a market's perspective, 4,800 is resistance. That's like 4,818 is resistance on the S&P. 4,600 is support again. We're very extended right in here, and sentiment with these inflows looks to be tactically a little stretched. So be careful as we start the beginning of the year. But certainly, we look at consolidations as an opportunity to be building into positions. And then this next week, we do have our outlook call for clients. That'll be on January 4th. The time is to be determined, but certainly we're going in the right direction. We'll have that. I think it's going to be at 8 a.m., but we'll send out a link so you can join in. Again, I'd like to thank our sponsor, Chico's Bail Bondsman. Let Liberty Ring. Join us again next week. We'll be 1 week older, 1 week wiser. Don't forget to follow us on Twitter and Renmac.com. RenmacAccess.com for important updates. Until then, I'm Jeff DeGraff.
I'm Neil Detta.
And I'm Steve
That's
Pavlik.
Steve Pavlik. But I was thinking, you don't appreciate the song. It's beginning to look a lot like Christmas. That line where they're like, and mom and dad can hardly wait for school to start again until you become a parent.
No doubt about it. No doubt about it. All right, we'll see you guys. Happy New Year.
Happy New Year.